Thank you, Shanika, and thank you, Spark of Hudson, for inviting me to host this conversation. And as we mentioned in the kickoff, this portion in which I'm going to present for a little while will be recorded, but our discussion after this presentation will not be recorded. So we invite you to put any thoughts as I'm going through a few slides in the chat, and we'll have some time toward the end for conversation. So of course, this is a really interesting topic, wide ranging. I'm going to try to cover a lot of ground here, and to do it quickly so that we can really talk together. And it's exciting that we'll have 4 sessions. So today is kind of high level, a lot of themes of things I've been thinking about, and a little bit organized around my resolution for this year, which is to kind of rethink everything, question and probe my own understanding, such as it is on all of these topics. So consider this not so much me teaching anything by any means, but me trying to just kind of stimulate some discussion and areas for us to further explore in the following months. So with that, want to actually ask a question for anyone who wants to answer in the chat that we'll circle back to at the end of the presentation, which is if you can tell me where this meme comes from. It's something I came across last week during that fateful day of quite spectacular events in our capital. So just be curious as to who knows what the references are in this meme, and what your thoughts might be as to why I've included it in a topic on money problems. I am a huge fan of internet culture, and so a lot of the content in here will kind of derive from things that I see or come across on the internet. But I wanted to start with this image of a stopwatch in a bottle, because I think it really represents my own thesis up until this point on what is money, which I think of as a technology or a system or way to capture time, essentially human time, which is limited for all of us. And money provides us a way with, in some respects, bottling our time and moving it around. So that's a big picture theme of how I think about money and why the certain technologies that are involved in Bitcoin and cryptocurrency are really interesting, and why I think they're very, very important as we think about money for the future. So this is something you guys have seen a lot if you spend time on Twitter. This is sort of how it started, how it's going, the Great Depression, food lines, and 2020 in Texas. We're having a lot of money problems, all of us in society, and this meme really kind of addresses one aspect of money problems, which are jobs and working. How do we address our money problems? Usually it means we need to get some kind of work. And I think some of the frustrations that we've all come across at some points in our career is this question of getting experience for a job, and then the job saying, well, you don't have the right experience, but you can't, this whole vicious circle, which I thought this was really very, very funny and representative of a very particular type of problem that we're facing kind of structurally in the society in terms of jobs of the future and how people are going to earn money. And then there are some people who are in maybe a different sort of situation where they don't have to depend on having a job to earn money. And certainly some of the tensions that have boiled over in our country and in the world have to do with income inequality. So that's a big theme, I think, of talking about money problems. And in such a situation, what happens? What becomes one way that people try to deal with these money problems?
If there's audio, Kianga, I can't hear it on my end.
Can you guys hear this? No, you can't hear that. You can't hear my audio. Okay. Well, I'll just describe what it is. It's a meme that went around on TikTok about people getting into day trading and utilizing Robinhood. So Robinhood is a payment app, sorry, not a payment app, but it's a trading app that's become incredibly popular as it makes it very easy to connect to your bank account and buy stocks and even buy exposure to cryptocurrency in a way that's very friendly for millennials. So this was just a very funny little segment, I think, illustrating the perils of getting overconfident because you make sort of a quick return on money, which can be very intoxicating and make you feel, you know, very smart, when maybe, you know, it's maybe not the wisest way or the safest way to think about earning money or making more money. So of course, you know, today, the last couple of weeks, Bitcoin has been in the news and has risen spectacularly, as it tends to do from time to time, and becomes a very attractive sort of catnip for people who are really under pressure. And it looks like a great way to make money quickly. And the psychology of markets and trading can really be very, very dangerous in terms of getting you overexposed and potentially losing a lot. So on that theme of markets and how volatile they can be, I wanted to give you just a little bit of history about myself and, you know, how I got involved in markets and trading and assets. You know, I grew up in the 80s, so I'm like a Gen X person, a child from this era where this movie, Wall Street, with Charlie Sheen was, you know, fortunately or unfortunately, kind of like very inspiring. And the slogan, of course, famously, "Greed is good," you know, really symbolized that era, and I think very much influenced my ambitions as a youngster to go to law school. I went to law school and graduated in the late 90s. Very much looking forward to moving to the big city and working on Wall Street. And you know, this was the time when we got on the internet using these strange plastic things, which I don't know how many of you guys remember this, but it was a really spectacular time of growth and new technologies. The internet was connecting the world like never before. 1999, this is a screenshot from 60 Minutes showing Jeff Bezos in his office during the height of the dot-com craze. And I used a BlackBerry to communicate with my emails at work. And it was really a very important sort of reference point for where we are today, particularly in terms of thinking about Bitcoin and the future of money. The idea of Bitcoin really emerged at this time, you know, at this time that I was entering my professional career. And we have a quote here from Milton Friedman, a very well-known economist, who talked about the internet. And the one thing at the time that was really missing from the internet was this idea of digital cash, and how can we have a form of money that works online and but still has the properties of cash in terms of its not being able to be counterfeit. So while Bitcoin is a newer technology per se, the ideas that led to its invention or its discovery really have been around for quite some time. And cryptographers and computer scientists have been working very hard to kind of figure this out, which they've done. So this paints a little bit of a scenario, I think, of where you know, I'm coming from in terms of my interest in money and new technologies. This is where I worked in the early 2000s. After September 11th, I was at Goldman Sachs. That's the old headquarters on the left, 85 Broad Street, and I worked for the commodities trading business, derivatives markets, and very heady time, exciting. You know, I watched all of this stuff on TV or in movies as a kid, and then I got there and it was all great. until it wasn't as great. And I want to talk a little bit about systemic shocks and the backdrop that we've been living with for the past, let's say 12 and a half years since the collapse of Lehman Brothers. So since the start of the Great Recession, the GFC, the Great Financial Crisis. I was working at Lehman Brothers at the time, so I had a front row seat to that implosion. It definitely really shaped my views about what I wanted to do in the future. And having also worked on new financial products as a young lawyer, credit derivatives, and very exotic, very sort of exotic financial instruments that ended up being kind of a problem for the global economy. So alternative ways of thinking about money, of thinking about markets became very attractive and important for me, having really lived through and worked through those days in 2008. And so right on the heels of that, or in the midst of that, bank failures, the failure of many institutions that we had taken for granted in terms of their safety and security, Bitcoin is launched. The Bitcoin network is launched in January of 2009. And this headline about a bank failure in the UK was embedded in the very first transaction. So as the Bitcoin network springs to life, whoever were the creators of this innovation, wanted to send a message, I think, about what the potential was for this technology, and what it was really addressing. So the Bitcoin, I'll talk a little bit about Bitcoin as a network, as a currency. It was introduced actually earlier than 2009 in October 31st of 2008. A white paper was released to a group of cryptographers, and here's a shot of the cover. Bitcoin, a peer-to-peer electronic cash system. So it was presented as an idea before the network actually sprung to life through open source software. And it was essentially looking for what was predicted in the late 90s, that one day we'll have a form of cash that works on the internet. And without going too deeply into Bitcoin in this talk, we have other sessions where we can dive deep on many of the things that I'll be covering in this presentation. But a key element of this network, and so again, Bitcoin is both a network and it's also a currency, a virtual currency that operates on the network, and it's programmed to be limited in supply of 21 million. So this is a big aspect of what this thing is that we call Bitcoin, and why it might be valuable is its fixed supply and its scarcity. And we can see that the supply of money in a society can be problematic if there's too much money. So this is a picture from Venezuela, kind of referring to the problem of hyperinflation and a stack of money being worth maybe less than a roll of toilet paper in crisis. And it's hitting home. These are some images that I've collected over the past couple of years, and it's stunning to sit here with you in January of 2021 and have had our own experiences at home with toilet paper and fights over toilet paper. And we've seen all kinds of political and social and geoeconomic upheaval in the past decade, that I think this level of chaos and stress on our political and our economic and our social systems. This is from San Francisco, the homeless epidemic that we have in this country. And this is pre-COVID. These images are pre-COVID. Obviously, the pandemic has had a devastating effect on money and our economy and our lives. And of course, an image like this from last week, it's stunning for so many reasons. What I wanted to convey with this that I think is important when it comes to money, and particularly the United States dollar, is what do the images of what happened last week convey to the world when our country, the United States, I mean, pardon me, for anyone who's watching from outside the United States, specifically the US as the issuer of the reserve currency of the world, what happens here politically has significant impact on the money situation and the economic situation for the whole world. And money, of course, in economics and markets are so much based on confidence and people's belief and their faith in the trustworthiness of institutions that are in charge of managing money and managing our economy and society. So, you know, these images of what have been taking place in the last couple of weeks, well, specifically the last couple of days in the country, are, I think, actually very relevant to the question of money problems and the nation's money problems. So I won't, I don't think you guys will be able to hear this if I play this, but this is just a few seconds of one of our Federal Reserve governors back in March on 60 Minutes. And many of you might remember this interview, which happened, you know, as the markets were crashing during the first lockdowns. And he came on to reassure the public that the Fed, our Federal Reserve, our central bank that manages our currency, has an infinite supply of cash. So there's nothing to worry about, which was a pretty spectacular thing to hear. And I guess they're right, because we're all getting checks. So I wanted to talk a little bit about money creation, like where does this money actually come from? You know, these dollars that you're seeing here in this image are not the dollars that we have today. These are older forms of our currency that were convertible to gold. I should mention that the United States dollar is no longer convertible to any specific commodity, which actually I found that there are still people who think that there's a bunch of gold in a vault somewhere to back the United States dollar. And I don't blame anyone who has that assumption, because I think that while that used to be the case, it's still, I don't think how our dollar and our currency is actually structured and operated is something that's taught very many places. And there's a lot of mystery behind it. And frankly, until I got interested in Bitcoin, I really didn't consider it very much. You know, what is a dollar bill? And on the dollar bill, it will tell you that it's a Federal Reserve note. So it's actually a debt instrument, and it is currency. It is legal tender by law. So it's called a fiat currency, is the kind of nature of our current United States dollar. But throughout history, people have used all sorts of things as money. These are giant limestones that have been used in times past as money, glass beads in West Africa, and in the Roman Empire, coins. So this is much more familiar to us today. And this particular graphic is kind of illustrating the practice of shaving the metal content from a coin to you know, try to stretch the reserves of a nation. So in some ways, it's the inverse of money printing, to the extent that, you know, a physical metal, a precious metal, limits your ability to create money. One way you can do is to kind of dilute or reduce the metal content in each currency, but that really hasn't ended too well. So here's another clip from our chairman of our Federal Reserve, Jerome Powell, speaking about how money is created today in the United States, which is that it is printed digitally. The central bank creates money, and it's done through a process of purchasing assets. So our money is essentially borrowed into existence. And this graph, I'm not sure how you guys have your images on the side, but if you hide, if you can see the full screen, on the far right is a vertical line. This chart is showing percent change year on year of essentially the money supply of the United States. It's called M2, which is money stock. So that's checking accounts, cash, and also some short-term convertible types of holdings like money markets and savings accounts. But what this is showing is that, from a year, again, it's a percentage change year over year. So it's showing you the increase in the amount of money circulating from one year to the next. And in 2020, you can see that we've created an enormous amount of cash to deal with the crisis. And this is one of my favorite internet memes, the brrr of the money printers. And these are our central bankers who are furiously printing money to try to keep liquidity in the system and keep everything working, and keep things from falling apart. So at the same time, we've gotten this great increase in money supply. We're seeing the velocity of money actually crater. So velocity of money is a reflection of how the money is circulating through the system, whether people are spending and earning, and there's a certain amount of velocity that reflects a healthy economy. And what's, I think, very interesting is as more money is being created, it's not circulating as much. And one of the things we fun to talk about together is, why is this taking place, and is it a problem? And what should we do about it? So I just want to kind of conclude on this theme of anti-fragile. It's something we talk about a lot with respect to Bitcoin and cryptocurrency, in that the particular network, the Bitcoin network, which began, as I mentioned, in 2009, and today, I don't have to tell you about the price. That's the easiest thing to talk about with Bitcoin, is the extraordinary increase in the price, and the increase in the collapse, and it's very, very volatile. But as a technology and as a potentially threatening a new thing, it has shown itself as a technology, as a network, and I think the people involved in it, as being anti-fragile for many reasons, for being censorship resistant, are things that we talk about in Bitcoin, because it's open source, it's not controlled by any particular person or company, and in fact, the way it's organized, it really resists the ability for anyone to collude to disrupt or kind of destroy the network. And I love this picture of the globe showing all of these lights, which I think is a good, metaphor, sort of representation of a series of independent people and organizations that have downloaded the Bitcoin software, plugged in a machine, and are running this program. So it's kind of like this virus in a way that's gotten out, and there's no one you can arrest to shut down Bitcoin. There's not like a headquarters of Bitcoin. In many ways, this distributed system of organizing resources is something we call anti-fragile. And I think that this is very relevant for our time, whether one gets excited about Bitcoin as a potential asset or as a form of money. I think that what was invented with this network, a way of organizing resources and distributing value across time and space, instantaneously or nearly instantaneously and very cheaply, represents a kind of anti-fragility that may be useful for each of us in our personal lives and our finances, and also as a local community. How do we build resiliency in the face of all of the things that are going on? So here is a Bitcoin miner. So Bitcoin, of course, it's a virtual currency. Even if you've seen an image of like a gold coin with a big B on it, like there's no coin. If anyone tries to sell you a Bitcoin that's a physical coin, like it's a scam, run. Because Bitcoin is a ledger that's basically keeping track of transactions, and the currency that is a Bitcoin is used as a financial incentive to provide security to the network. And this is a device that Bitcoin miners, basically people or companies who provide the computing power to secure the network, to process and approve transactions, have thousands and thousands of these machines plugged in on warehouses and running an enormous amount of electricity. But this is it. It looks very harmless, doesn't it? It's just a little ASIC miner. And it connects, I mean, the way that you actually interact with the Bitcoin network is as an individual through third-party platforms, such as Coinbase is a popular way that individuals can connect their bank accounts and transfer US dollar fiat into some of Bitcoin or these other decentralized cryptocurrencies, open currencies. And on the right is an image of something called a hardware wallet. A lot of things, a lot of the discussion within the Bitcoin and crypto community is about sovereignty, this concept of like being your own central bank and not your keys, not your coin. So the network itself is accessible through a secret word, which is essentially a bit of software that provides a private key to unlock an address on this network, which is what allows you to actually move the currency back and forth. And when you have Bitcoin at some place like Coinbase, Coinbase is operating as a kind of custodian for you and is holding the keys that represent your Bitcoin for you. On the right hand is taking things to another level and really having control, having possession, to the extent that that's a good analogy, which it's not really, but that's a deeper dive to talk about. Is it possible to really even own Bitcoin? Does that even make sense? But the hardware wallet is a way to take even more control over the asset, which has its pitfalls. There's a big story today in the New York Times. Some of you've probably seen about somebody who's trying to remember a password, who's got like a lot of Bitcoin trapped somewhere, and he's got 2 more attempts on this password.
$220 million.
Yeah. So, it's proceed with caution when getting involved in crypto assets, because if you want total sovereignty over your wealth, you want to make sure that, there's a lot of pitfalls. So leave it there. But it's definitely a technology that is, I think it's here to stay, and it has a lot of potential, not just as money, but again, I think this theme of being anti-fragile and a way of distributing resources and maybe coordinating in governance. There's a lot of, hopefully, that we can bring to the table in our societies and in our monetary situation, both at a sort of macro level as well as down to the household level. Other countries are further along in many ways in terms of, I think, the visibility and the adoption on a day-to-day basis, but the United States is coming up quickly. We have some new rules that have come out in the last couple of days and weeks that are allowing our banking institutions to utilize this technology, and kind of just clarifying the regulatory picture of how our existing banking and financial system may be merging with this alternative technology, which has made a difference everywhere in the world. I mean, particularly countries and places that don't have the kind of products and development that we have. We've seen examples where blockchain technology and cryptocurrencies have really addressed some very fundamental money problems for people all over the world. So I say, yes to being anti-fragile, yes to thinking differently about how we can address the world's and our personal money problems, and how to approach the future, and with that in mind. So that's the end of my prepared remarks, and